Good morning. Welcome back to the Innovator, the Imitator, and the Idiot. I'm Kyle Wong with Moxie, Colorado now.
I'm Corey Martin with Bank of England Mortgage here in Denver, Colorado.
Today we are going to be talking about the upcoming and seemingly scary times, and it's going to be about when a recession can be a good thing. And I was just telling Corey this before, but I don't want to downplay the negative effects of a recession or, people losing their jobs or any of those very serious things. However, we just wanted to highlight the silver linings around that and, the potential good that can come out of recessionary periods.
Yeah, that's it. Recessions are not, they're not all great things. Obviously, we know that they're hard times. I think that depending on how old you are, you have real memories of what recessions can look like. For me, I remember 2008. Right after the housing bubble, and man, I remember gas prices being super high. I remember it was tough to find a job, a good paying job.
Even people that were very well qualified.
Right.
With good degrees, that was tough.
Right. And I just remember, I think the thing that impacted me the most, and this is kind of not necessarily business related, but people were sad, man. The energy around the country was just kind of low. It was low vibrational. The vibes were low, if you will.
The vibes were off, man.
The vibes are off, brah.
And that's true. That is really sad. Because you're right. There is sort of an atmosphere that changes, and it kind of veils everybody, and it sucks. And again, I'm not going to go into theoretics and what I think my estimation for the future is going to be, because we actually briefly talked about that in a previous episode. But from what I'm hearing and from what I'm seeing, it's probably not going to be that good.
No.
Again, I don't think the housing market is just going to have it's not 2008, 2007. It's not going to be like that. But we're definitely hitting a recession. And it's coming very quickly. So 2023, I'd be very curious to see exactly what happens. But the other thing was, it's not just the U.S. either. I mean, this is, we'll kind of get to the good parts here in a second. It's all doom and gloom right now. But
right.
This is a global thing. European markets, Asian markets, everybody's hitting a period where it's kind of getting a little, we're at the top of the roller coaster here, inching forward, and we're coming down very quickly. So it should be interesting. But again, we're here to talk about the highlights. So first things first, what can be good? A lot of these are real estate specific, but some can be translated really just throughout the whole market. So one of them is the fact that the market cools. Things slow down. Inflation starts to curb as we're coming out of a super hot market. And that can be a very good thing.
I think that, running, it's really, really, really hard for a market to stay as hot as it did, as long as it did. If you're looking at just the way that recessions go and the cycles that things go in, we've kind of been overdue for a recession for a few years.
Because what's it supposed to be, 7 years?
7 to 10 years, right? Every 7 to 10 years, and so we've been overdue for a recession, and I think we doubled that. I think we went to 14 to 20 almost, right? I think it was call it around 12 to 12 to 14 years was when,
because people thought 2019 was going to be the time, and it just kept, and then of course COVID, and we're like, oh boy.
And so what happened is that we're seeing the market cool now. The market has been running very, very hot, not just the real estate market, but generally stocks and bonds.
Crypto now is something we should probably include.
Absolutely. The cost of goods has steadily increased as a result of just people being more money being in a market, right? And
I remember hearing a recent fact that, don't quote me on this, but I believe it was the highest inflation rate over one period in the last 40 years, which is pretty crazy.
If you think about it, 40 years ago, that's 1980.
Right, and that's bad if you know what was going on in that time with the oil crisis and whatnot, but that's rough. That's rough. And people are feeling the effects everywhere. You know, it's not just like, oh, great, now I can't go to the movies. It's like some people are struggling to find food, struggling to pay rent.
Absolutely.
Like the money that you made last year is, you know, if you, let's just say you got a 5% raise, that's not even enough to cover what inflation has affected now. Like if you go to the grocery store, you know this. If you go to buy a car, you definitely know this.
Right.
You know, it's expensive all around.
Yeah. And so, and it's tough to look at it this way, but we do believe that mindset is everything. And
absolutely,
this is a good thing. We could not have goods increasing at the same rate that they were for another 2 years, another 7 years, right?
Yeah.
We couldn't skip another recession cycle, right?
Right.
We just simply couldn't. Not even thinking about just like, you know, your average middle income, adult here. Let's think about some of the guys on the bottom, right?
Yeah.
Like
people that are making minimum wage, people that are single income with multiple kids, or even a single kid, like, you know, that's rough.
They need some sort of relief, right? They need some sort of cooling of the market. And so, I know that it's really, really tough. You know, obviously if you are a tip-based earner and your tips are coming down, that stinks, right? That as a result of the recession, that stinks. That said, if you look at the collective, if you look at the whole, it is a good thing for us to be able to, maybe not have milk go up 25 cents every single time we're at the store, or have our gas prices, increase, 25% or 25 cents every single time we go to
I drive a diesel, man. I feel it.
Ooh,
I feel it.
That's
it's
tough,
rough,
brother. That's tough.
When I got it in 2020, I'm like, oh, this is sweet, man. 45 miles a gallon, and now I'm like,
I don't know. But another thing that as far as like, the good things that can come out of the recession is strong businesses being built, right?
Yeah, absolutely. So historically, there have been some super big businesses that have been started during recessionary periods. And we always say it's tough because it's kind of like trial by fire, right? It's like being dropped into the pool and being told to swim, because those are generally when things are hard on businesses, small businesses and large companies alike, all the national big ones that you've heard of. But, I mean, what are some examples of big businesses?
Well, interestingly enough, you think of a company, Apple, Apple, a company that has been around, like that is a huge part of our life, right? Apple has integrated themselves into every single part of our life, how we communicate, how we entertain ourselves, so on and so forth.
I'd argue they kind of disrupted the tech industry, actually.
Wholeheartedly, right? They absolutely did. Even in the sense of just being able to take and put computers in every American's home, that idea, that concept. Well, Apple was started during a recession. Was
it the 80s?
Yeah, absolutely.
It totally was.
Absolutely. Wow. We're thinking about Amazon, another company that was started during a recession.
.com crash, huh?
Right? We're thinking about IBM, another company that was started during a recession. And I just think back to CNN, another company that was started during a recession. I think back to some of the quotes that Warren Buffett, one of the guys that we named our podcast after, his thought is, be wary when everyone is excited and be excited when everyone is wary, right? So in a time like this, in a recession, when people are, holding on to their money, or they're not necessarily looking for new ideas, you can go in and build your strong business based on really good values, really good morals, really good tenets that are and that are able to sustain the test of a recession. If they can stay alive in a recession, obviously they'll be able to stick around when things are on the up and up. So, it's a great time for, if you do want to start a business, if you're headstrong, to build those habits, build those core values that are going to take the company to new heights. Yeah,
and I say it kind of like this. It's like being in the off season, and practice and train when you're in the off season.
Absolutely.
Because when the season comes and it's time to perform, that's not time to play catch up. That's the time to be ready and be on your game. You want to have everything chiseled and refined. And so that should give you hope, small business owners,
right.
because we know how hard that is.
Yeah.
Because, we both got to experience a really, bless you.
Thank you.
We both got to experience a really high during COVID, which, again, COVID's not a positive thing, but during that market, it was a very hot market and a high place for us fiscally. So that was nice. But we always know what goes up must come down. And so the higher you go up, inevitably you have to come down, usually about that much. And so, we'll see what happens going into the future, but we know what that's like. And so we want to give you hope for those people that have big dreams and big ideas. Like, take the risk, take the leap. That's what I always say. It's hard. I think we've both gone broke a couple times trying to start our businesses.
Hey man, do you mind if I borrow $5?
I was going to say, we'll talk about that after we're really successful, but it's tough. I get it.
Absolutely. But the idea that we have, so what we've gone back and forth with, we have, kind of given each other pep talks and whatnot, is just that stay the course. Now is the time to build your business.
Yeah.
Now is the time to develop the right habits, to develop the right values for our businesses, so that when 2 years from now, when things are on the up and up, we'll be able to not only sustain the business that we've built, but be able to scale and grow with it.
Yep. Yeah, that's the goal. That's the vision. And don't let go of that, guys. I know sometimes it's really hard being a business owner or whatever you're doing. If you're just going off on, not on the beaten path, it's kind of hard because it's very easy. I've thought about this multiple times. I know I'm going off a little bit, but I've thought about this multiple times. I'm like, it was really nice having a check come in every 2 weeks that was consistent and having benefits and all of these things that I had at one point. Just call off when I want to go on vacation. And now it's like, whoa.
Vacation.
I thought I'm supposed to be getting paid right now. Like, yeah, I know, right? Vacation, like I've never heard of that. So it can be tough, but I really do want to encourage you. Like, it's well worth it. I was just hearing this quote the other day at my team meeting. Live a few years like nobody can, so that you can make what nobody can in a few years, or something along those lines. Like, make the sacrifice. Like, I know Robert Kiyosaki is one of those super successful Rich Dad Poor Dad guys. He's like, I lived in my car for a year with my wife. Like, that's rough. Like, being homeless for a year, living out of your car while you're building a business. Now he's like a multi-millionaire. It's super cool, but it's not always a glorious thing where we come from. And that's just part of the story. Sometimes the business is, the rose that grew from concrete, right? I love that, man. I love those stories. Right? This got to put some Tupac on the podcast. For real. So, why would it be a good time to buy real estate in a recession? That is a very good question. I'll break this up into kind of two parts. So, residential and commercial, you have two different segments that are, again, very different, but you also have multiple buyers for each. So from the investment side, let's just start there. Residential, it can be a good time because that's when, again, we mentioned this, that the market cools, right? So there's not as much competition. You don't have as many vetted or potential competition for buyers. And competition drives the price up, right? Right. Competition, If I am holding a cup of coffee and the sign on, and I'm selling it for 50 cents. If I've got three buyers, one guy's willing to pay 50 cents for it, the other guy's paying 75 cents, another guy's paying $1, right? Right. So competition does drive price. Yeah, and if nobody's around, you might be like, shoot, maybe I should have done a quarter. It's very simple supply and demand. There's a lot of nuance that goes into it, of course, but so when the market cools, when rates go up and less people can afford the same house that they could 6 months ago, 12 months ago, it's just less demand, right? So you, as a potential investor, can go in at a lower price, which is good. On the commercial side, commercial tends to trail about 6 months behind. That's really good because you still have businesses that need spots. You still have places that need office spaces or coffee shops going up, stuff like that. So that's another good thing to do. But yeah, it's very similar on the first-time home buyer side, right? Or just the home buyer side. Like when you have less competition, even if it's at a higher interest rate, that's a good thing for you, because the things that we were both seeing in the 2020 market, I think got to a point that was downright, I want to say negligent in a way, because you would see people out of town, 100K over, wave inspection, like all this stuff. And if you know about the home buying process, you know how much can go wrong. You know, and again, I don't want to ever be like negative Nancy, like doom and gloom, but I just want to be cautious and represent my clients well, because the last thing I want is somebody to get into something and they can't afford it or they hate it, right? Like, I want you to like it and I want you to be able to afford it, obviously.
Right.
And so, you know, when I saw that happen, so many mistakes were made at that time. So much unethical business practice, unfortunately, on the real estate agent's end. So many, you know, very questionable things on the buyer's end. And, it was, you know, that's why you hear of so many people like, man, I bought too high. Like, I bought at the top. Like, I have regret. Or buyer's, what is it called? Buyer's remorse. Yeah.
Right. That's exactly it. I think that, you know, what we saw in 2020 was so many times, right? Like, going back to competition, right? So many times it's, you know, man, I'd love to buy those shoes. And we get so fixated. There's a psychology behind this that we get so fixated on, man, I gotta have those shoes. And I know that they are just a pair of, you know, Jordan 4s that I can go get into finish line. But hey, I really, really want these shoes and I want them right now. And so we are willing to maybe pay, you know what? That dude wants them, but I want them, so I'll pay $25 more. You know, you know what? If that guy is requiring you to open the shoebox and walk around in them, then you know what? Actually, how about this? I'll pay $50 more for the Jordans, and I don't even need to try them on. I don't care what size they are. I just want those Jordans. Yeah. And what ends up happening is you finally get the Jordans, and then you find out, actually, I got wide feet. These don't even fit me that well. Yeah. Or I don't even have any outfits to match with my Jordans now, right?
Wait, I don't even like Nike. What?
Exactly. And so when we in a market like this, when the market cools, what we have happening is, oh man, there's not as many people. Yeah. I get a chance to actually sit and think, hold on, I don't even like Jordans. I'm actually more of a Converse guy. I love Chuck Taylors. Let me go ahead and spend some Chuck Taylors. You know, instead of spending $100,000 on over list price, just to get this beautiful house in a great neighborhood, I'll just go get a condo. Yeah.
Like, to sum it up, I saw a lot of people paying a lot more money for something that other people wanted just because of the demand. And it's at the end of the day, do you want that house? And people didn't even consider that question. And I thought that was kind of sad. Yeah. And so now, you know, when I'm working with buyers, it's like, oh, we can go schedule a showing when you want to. Oh, we can actually talk about it tomorrow, sleep on it, you know, think about the decision. It's usually a good thing to do with the biggest investment of your life. Right. So, that's why I think it's a great time to buy now. And again, I feel like we say this all the time, like, now's a great time to buy. Here's why. Are you getting the hint yet? Because I don't want you to be like, oh man, 5 years ago when this happened, I should have bought. Like, everybody says that. Yeah. So again, if you're in the position to buy and you can afford it reasonably, do so. Yeah. Talk to us. Like, we would love to go through the numbers and have that conversation with you. But also, let's just say it's not going to be your primary residence. You're not going to live there. It's a great hedge against inflation. So obviously you know about the advantages over renting. But hedging against inflation, meaning that dollar that I put into this investment now, while I may not be able to touch it for a little while, is going to be at a higher value still because, well, I'm wording this terribly, but because of the rate of inflation, right, it peaked at like 14% in Colorado, which was crazy high, above the national average, that dollar is worth 14% less in Colorado. So I don't know about you, but most people aren't getting a 14% raise year over year. Right. That's a lot of money. And so that same $100,000 that you made, you now have to make 114.8% more next year. Right. Anyways, you have to make us quite a bit more. So here's the thing, even at like, let's just say 6.5%, 7%, if you put that money into what I like to call your house fund, right? When you get a mortgage, you get a loan, you tie some up, but you make payments every month, it's like an account. And you put money into this account, and that's why you hear about those people from like 1982 or whatever, and they're just like, yeah, I spent 50 grand on a house at a admittedly high interest rate, and my payment was like $20, and you're just like, wait, what? How?
Yeah.
And so you don't want to be that person in 20 years. It's like, oh man, back in 2020, I could have bought it this much. And
right.
So essentially, to really make a long story short, and that sounds kind of convoluted, you're making your money go a lot longer.
At the rate of...
Yeah. I'll let you elaborate on that. That was a little long-winded.
I get what... So basically the idea is that if you were to go and invest your money in the real estate market versus holding on to it, if you invest in the real estate market, it's going to grow at least 6%, right? Whereas if you just hold on to it, it's going to decrease in value by 14% if you live in Colorado, right? So in Colorado, we know that at the very least, real estate is going to appreciate 6% year over year. We also know that at the moment, inflation is 14%. Is it year over year?
I think that's where it peaked out. I don't know the exact number, but,
well,
I think conservatively it's probably 9%, which is still high.
Incredibly high, right? So what you have is the opportunity to either increase your money by 6% or decrease your money by 9%.
Now choose.
And so that's the idea, is that it's a great time to hedge against inflation.
That's a way better way to put that. I don't know why mine was so complicated.
Oh man, I'm that's it. I just try to break it down for us. How can I put it into a song or something like that? So and that's but that's it. And don't get me wrong, right? There's other opportunities, other places for you to put your money, right?
Yeah. Stock market average rate of return is like 7%, which is fine.
Yep. You can crypto.
Oh my gosh.
Absolutely.
Yeah.
You can put it into crypto. So I'm not saying that your options are only real estate or hold on to it and put it in the shoebox underneath your bed, right? That said though, real estate is probably one of the most consistent and safest bets that you can make out there.
Yeah.
Stock prices, even that 7% return, that's over the course of, how long, and there could be some dips in there, right?
Right, there are ups and downs just like anything else.
And you could grow a few more gray hairs over the course of that process while you're watching your money grow and then shrink and then grow and then shrink. Whereas, and there's potential for that as well in real estate.
Sure.
If you purchase an investment property, you could definitely grow some gray hairs while dealing with a property management company or renters.
Ooh, that's true.
So it's not to say that there's no risk or no disadvantages to going into the real estate market over the stock market, over crypto, over
going to school. I think that's another thing that people consider. They're like, what is my what's my investment, what's my rate of return? Some people go through, calculate the cost, how much am I gonna make, and similarly I think that's an investment as well. Investments in yourself is important, but another advantage I want to say for real estate is you have to live somewhere. You just do. So unless you're in your ideal area living rent-free somehow and it's perfect, wouldn't you want to be putting your money into stuff? Because nobody forces you to put your money in a stock account, right? Like you can, and usually you'd want to have a decent enough amount of money to where you can just be like, take this, because you can't, you're tying it up essentially. Like you can't do anything with it. But at least in real estate, you don't just pull out equity every day, but you're putting it into an account that grows for a place that you have to live in anyway.
Yeah.
Right?
That's it. It's a cost that's already built into your life. You might as well be able to try to maximize it.
Yeah.
So, and especially during a recession when, we all have, during a recession, we have to just be a little more efficient. We've got to be a little smarter about how we use our money, where we spend where our money
goes. Bust out those coupons.
Right. And so that means that, man, if I can find a way, there's only so many ways that you can. For your car example, your car is not an asset, it's a liability. It 100%. Costs you money every month. But man, what if I can make my car actually make me money? At the very least, just the net, right? It's just
Right.
it cancels itself out. What if I took one of those car signs, right, the car magnets, and slapped that on my car, and the owner of the advertising company paid me whatever my car note is.
Yeah.
Okay. And then I take another one, and that advertising company pays whatever my insurance is, and then another one for Shell, and I get free gas for the month. Okay. Well, now you have taken your liability and at least made it just a no cost for you, right?
Right. Cars are one of those like super expensive. I mean, technically it's an asset, but he's saying it's a liability just because it costs you money, because it costs you a lot of money.
Right. So if you could do the same thing with your housing,
why wouldn't you?
Yeah. Why wouldn't you take the opportunity to make your house? It's a cost that you're going to have to have.
Or with cars, just one more quick thing is that you can rent it out on Turo.
Yep.
Yeah, I mean, you can rent it out anywhere, but on Turo is a big one right now. I know a guy with 30 plus cars, and that's all he does.
Yep.
But he has 30 plus cars.
Yep.
Like, how many people, because I don't know what his financial situation is, but like, that's a pretty good setup to be able to say.
Yeah.
So obviously it's a lot of work and there's a lot to go into it, but why not leverage the things that you do have?
Yeah, and especially in a recession, right? If it's it's something that you are going to have to deal with, I got to go to the doctor, might as well, make it fun. Or, if it's something that you're going to already have to deal with, you might as well get as much value as you possibly can out of it. And I think that's what this is, what we're trying to say is that, you're going to have this little housing cost. You might as well get as much value as you possibly can out of it. And in a recession, it's a great opportunity to do so.
I was going to say, so in a recession, last couple of things is costs tend to either stagnate or come down. Depends heavily on your market. Usually, again, like I was saying earlier, the markets that went up so fast and are crazy hot are usually the ones that are coming down the fastest. So like luxury or secondary markets, or just big cities where people relocated to. And then also rents actually tend to follow along. There are a lot of things that go into it, but they follow the market. Right. So if people aren't buying houses, people usually aren't trying to rent. And so market rent tends to kind of plateau a little bit, or in some cases go down. And then for potential buyers in a recession, here's another thing I wanted to mention is REOs. So real estate owned or bank owned properties, right? So I'm sure you've heard of, 2008, there were a ton of foreclosures and all this stuff. We don't estimate there's going to be a ton of foreclosures this go around, but those are some of those deals that you can be looking out for, because those are the houses that, let's just say they get short sale or they're bank owned now. You can get a really good deal on a house just because it wasn't sold in ideal conditions.
Exactly. And when you're getting a good deal on that house, you could also get a great rate on that house. What traditionally we see, there's some evidence against it, but traditionally we do see interest rates come down during recessions, because we want to see people, we want to incentivize people to spend money. That's not to say that you should wait for a recession to purchase a home, because there's still benefit to purchasing right now, in that you're adding to your house fund, you're building equity, quality of life. There's so many other things that come with purchasing a home, but this is the idea that you purchase now, you purchase here in November of 2022, we'll timestamp it, and then 6 months from now you can refinance that home at a lower rate with more equity into it as well. And so that's something that the folks with money are doing, the high net worth clients are doing. And
so are big companies. That's what I wouldn't say that's what worries me, but like if big companies are doing it and wealthier individuals are doing it, usually you should be too. That doesn't apply to drugs.
No. That does.
But when it comes to money.
Hey man, I like to party. I'm kidding. But no, that's it. It's this idea that these big companies have more data, more information available to them than your average American does. Therefore, they're able to make decisions that in a way that your average American wouldn't. we are absolutely tapped into what the bigger companies are doing. We are absolutely tapped into the data that they're using to drive their decisions, and with that, we're able to pass along that information to you guys. So
you can make smart investments too.
Exactly, and no matter what, if we're in a recession, if we're not in a recession, if things are doing well, if the economy is booming, if the economy is bust, no matter what, there's always in every market, there's an innovator, an imitator, and an idiot. I'm Corey Martin with Bank of England Mortgage here in Denver, Colorado. If you have any questions about personal finance whatsoever, please reach out to me on Facebook at Corey Martin or Instagram at Mortgage Consultant 5280.
Yeah, and I'm Kyle Wong with Moxie, Colorado, brokered by EXP. I just switched over, that's why it's different now. But if you have any questions regarding real estate or I guess anything in general.
Yeah, cars.
Yeah.
Candy corn.
No, we're not going to open that up again. It's November now. We're done. I'm getting it next year. We'll talk about it next year.
Hey, hold on. Before we get off here, what's your stance on pumpkin spice lattes?
I dig pumpkin spice. Goodbye, everybody.